Hi guys, I'm Ryan Mack. Welcome back to Trading Guys, and today I'm going to be running through a full weekly fundamental review for you. Now for me, I am a heavily weighted fundamental data, then technical analysis swing trader, long-term hold position swing trader. There are times where I might not enter a single trade for 4 weeks, 6 weeks, 8 weeks. I just sit and wait until the right moment. But on the flip side of that, when I do take a trade, I equally hold it for just as long, 5 weeks, 10 weeks, 20 weeks. I will let it run. The only time I really look to close a trade is if fundamental, solid information changes, and then I will look to close it. Today, I'm going to explain the various different sites that I use to determine that. I won't do that in all the videos, just this one, because it's potentially the first one of you see me doing it. So, in general, what I use to get my data is actually trading economics, okay? So why do I use trading economics? You get tons more data. You get it far faster than you would normally get it with Forex Factory. So for example, if you're someone who likes to trade CPI, NFP, if you get it here and the NFP time comes up at 8 p.m, the minute the clock strikes 8 p.m, this will instantly give you the numbers. Whereas, if you look across at Forex Factory, it will give you that little loading up sign, and you're just sitting there thinking, come on, and at that point, people have already taken the trade. I don't bother trading NFP and CPI, but if you are someone who does enjoy doing that, I recommend trading economics is far better for you, okay? Now, the reason why I use Forex Factory to run through the weekly fundamentals is simply because if I click on here for countries, you can see for me to select countries, it's a bit of a nightmare, okay? However, if I click on Forex Factory, you can see if I come across here to the filter, it's extremely simple for me to cover one country at a time or one currency at a time, however you want to look at that, okay? So this is why I do it. Now, what I also use, which comes second after fundamental data, is Prime Market Terminal. You may have heard about this. It's a fantastic piece of kit. It gives you retail traders data. It also gives you banking data. So it gives you what's called COT. It's commitment of traders. So not only can you see what the highest percentage of retail traders are positioned in a particular pair, you can also see what the banks are positioned within a particular pair. So let's click across here. Down here it's called COT, commitment of traders. So basically every week, the large institutions, banks and so on, they must submit the trades that they're in, that then gets cross-referenced and checked, and then every kind of Thursday or Friday, that data gets released. Have they heavily entered in buys, sells? Are they bullish on GBP? Are they bearish on AUD or still bullish on AUD? You can see it all here, and you can see the position size from the dates. Have they added to long positions or short positions or vice versa, okay? So it is a phenomenal piece of kit. You don't really need it for scalp trading or anything like that. It's more for long-term position holding, okay, and giving you that extra bit of data. However, if you understand fundamentals, then that's all you really need. This is just a phenomenal piece of kit, and it really helps give me more confluences when I wish to enter a trade, okay? We won't spend too much time on this. This is just an insight. So, coming back to Forex Factory, what I would do if I was you and you're watching this, if you get a notepad and pen beside you, for the title, you're going to write, let's just say, currency strengths, okay? Now, underneath that title, from left to right, you're going to write strong, weak, and then neutral, okay? I know that may sound odd because logically it would be strong, neutral, and then weak, okay? But we're going to do it this way. Strong, weak, and then neutral. Now, as we run through the fundamental data for each country, what we will do is we will place them where we think they will be based on data. So is it running strong right now? Is it weak? Or is it neutral? Then what you do is you use that data at the end of running through all the pairs to decide what you're actually going to trade. This here. Now, some people look at all this, right? And they just think, oh my God, my head's falling off. How am I supposed to know what I'm looking to trade through all of that? Well, you do that through fundamental data. You decide which economies are strong, which economies are weak, which economies are neutral. You ignore the ones in neutral, and you simply pair up a strong economy with a weak economy. So, for example, let's just say AUD was strong right now and Canada was weak. We would then be looking to trade that. And we now know that from fundamental data, we are looking to buy that pair. Okay, so you'd come across here. There you go. AUD CAD, bit messy just now, but you get the idea. We'd be looking to buy that. Now, on the technical side, where would you be looking to buy from? There isn't much value to buy it from here, although, could you? Yes, you could. There's just not much value. My preferred area of value to buy it from is when it actually comes down to around this region here. I'm not going to cover why that would be on a technical basis. I'm just giving you a brief insight on that. I do have plenty of videos on that, and I will make plenty more in the future. Okay, this is just a rough insight. Could you trade it from here? Yes, you could. There's not a lot of value. If you come across to the weekly, look, okay, I personally, even if that came down here, rejected and went, I wouldn't be entering that trade, okay? It's just a personal preference. You're more than welcome to take it. I'd be looking at around about this region here for reasons I won't get into on this video, okay? So let's jump back. Now, when we are going through the pairs, what I do is I go through each currency individually. Where are we? Except from AUD, China, and NZD, okay? I go through those three together, and it's because they're closely correlated. It's called positive correlation. So if China goes up, AUD in general will go up, okay? You need context. You need far more context than this, but in general, okay? If China is doing well, AUD will do well. If China is doing bad, AUD will do bad, okay? Now that's called positive correlation. They move correlation with each other. You also get what's called negative correlation, which roughly is USD AUD. They mainly tend to be negatively correlated. So if AUD does well, USD will be doing bad. If AUD does bad, USD will do well. Okay, so they move in polar opposites from each other. Okay, now we'll come across here. That's this week. We want to look at last week. Just make sure your dates are for last week when you're going through this. Okay. And all you're going to do is you're going to run through the numbers on the side here. Again, I'm not going to go too much in depth what each thing means. This video would last hours if that was the case. However, I do have a full-blown A to Z course where I've made videos running for 3 to 5 minutes each time that breaks down each of these things and why we want to see some numbers higher, why we want to see them lower, and the effects that they have on the market. I've also made the same video, why we care about the bond market, central bank rates, and so on, okay? So if you want that entirely free course, I will give you, there's about 32 to 34 videos on that. I'll give you all for free, okay? And that covers fundamentals, banking data, and technical analysis. And during that course, I actually took live trades while I was doing it. Certain stuff was coming up, and I took the trades while running through the course, so you can see that we actually practice what we preach, okay? So, moving on. Here we have got, I'm just going to fly through it. You see the numbers here. So bearish, but getting slightly better. Bullish. Now when it comes here, rate dog, China, manufacturing PMI. Now you see here it's red, okay? It's red because it's dropped since the previous one. It was previously 51.7, it's now 50.9. Now, don't be fooled simply by the colour red, and don't be fooled that it's dropped, okay? Yes, it does mean that things have got slightly worse since the last reading. However, when it comes to manufacturing PMI and services PMI, the easiest thing to remember is if it's above 50, it's bullish for the market, okay? If it's below 50, i.e. 49.9 and below, it's bearish for the market, all right? Now, that is 50.9. At this current time, it still remains bullish for China, okay? Don't be fooled that it comes in red. Do not focus on the colours. Now, moving on, household job advertisements, bullish. Now, also, don't be fooled by this being green and thinking that that's bullish, okay? If you look previously, it was 1.2%. It's now 0.8%, which means it's dropped. It's coming into the line of bearish, okay? Now, why is it green then? Because it was forecast to actually come in much worse at 0.2%, okay? From 1.2 down to 0.2. It came in better than forecast. So that is why Forex Factory has listed it green, okay? So do not base something being bullish or bearish based upon the color being red or green, because it's not the case, okay? Look at the previous and double check. Has it dropped or has it increased? It's dropped, so it's bearish, okay? A bearish effect on the market. Here we have, so I'm going to fly through it now, okay? Bullish, 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 bearish, bullish, bearish, bullish, unemployment rate, let me just check that. Bearish, bullish, bearish, bullish, but it got much worse. Where are we? Goods trades balance, bullish, bearish, and US dominated trade balance, bearish, okay? Again, don't be fooled that they're green, it's because it came in better than forecast. Now, what you're going to do is, you're going to jump across to your notepad, and where it says underneath strong, you're going to write AUD, okay? Underneath strong also, you're going to write NZD, okay? Now, the New Zealand economy isn't really that strong at the moment. It's going through, within this data, you get a thing called market cycles, okay? And the market will cycle. In fact, I can show you. Here's one I made earlier. Gold, okay? Let's have a quick look at gold, daily. Okay, so here's one I drew up earlier. There will be times where you will see me talking about something being bullish and bearish in the long term, okay? So for example, I'm still very bullish on the USD right now, okay? However, the USD right now is pulling bearish. When I'm saying it's bullish, I'm talking about the overall market cycle. You know, I'm talking about this main move going up. When I'm talking about it being bearish just now, I'm talking about this part. Okay, I'm talking about, I'll just make that larger. I'm talking about this part here of the market cycle. Okay, so right now the USD is bearish, but overall it's still very much bullish in the market cycle. Okay, and it's the same with all other pairs. NZD right now is strong, i.e. it's here in the market cycle. Okay, it's coming up. However, overall, the economy is not that great, okay? So it's really on a kind of downward trend overall. It's just kind of fighting its way back at this small segment, okay? So you need context. Context is very important when it comes to fundamentals, all right? So you're going to, for now, you're going to be putting AUD in strong and NZD in strong. And of course, for China, we don't trade Chinese yuan renminbi, so we don't have to mark that down, okay? We simply use China's details because if China's production and manufacturing increases, they have to order more produce, okay? And they mostly do that from the likes of Australia because it's a huge mining economy, and that will then boost Australia, okay? So by seeing what China's doing, if it's progressing or degressing, we can get a feel for how Australia is also looking, okay? Moving on, what we're going to do is we'll have a quick look at this week. Do we have any news this week that we care about? So for China, we've got CPI and PPI. AUD, we have cash rate. They are not looking to increase rates. Yeah, that's pretty much it. We'll have a look at the statement when that comes out, the rate statement. Inflation expectations, new loans, money supply. So, okay, so there's not a lot of news coming out this week that we really care about. We'll just keep an eye on Tuesday, okay? Now we can swiftly move on to CAD. Now, I already know that CAD is weak, okay? The Canadian economy is weak. So I would already, on your notepad, already place that in weak. Now, one of the things we have to take note of with Canadian dollar is that it's very closely pegged to oil. So if oil does well, then Canadian dollar will show strength, okay? So sometimes, maybe someone will watch my video and be like, oh, this guy said Canadian dollar was weak, why is it flying? If you jump across to oil, pretty much guaranteed that you'll see oil is flying, and that's where you've got that kind of false sense of strength coming from, okay? But the Canadian economy is not strong at the moment. I'm sure we have some good numbers coming up, okay? But good numbers, you know, once in a blue moon doesn't mean a strong economy. It just means they've had a good month, okay? Here we can have a look. So Trade balance 3.9 in the green, so that's positive, and it's increased since before, so that's bullish. Manufacturing PMI 53.5, it's increased again, so that's bullish. Again, that's because of the oil price in Euro going phenomenal. That's all with the whole America, Iran, Trump, blah, blah, blah. Employment change 75.1, fantastic. That's increased again. That'll be oil production and stuff, people having to come in. Not only that, but that'll be a major factor. Unemployment rate has dropped, and IVPMI 55.1, which has dropped, but it's still above 50, right? And 50 and above is bullish. So that's actually a week of good data for the Canadian economy, but I would not be putting the Canadian economy as strong, okay? It's still weak, in my opinion. This week, what have we got? We don't have a lot of news, okay? So that's fine. Just put Canadian dollar in weak, and we shall move on. Now, CHF, Swiss franc. I actually never look at CHF, and this is why, okay? There's never any data, and when there is data, it barely moves. So how do I trade Swiss franc? Well, for me, Swiss franc is never really traded based upon data. It's based upon market sentiment, okay? Are we in a risk on sentiment or risk off? If markets are risk on, then I'm looking to sell CHF against a stronger economy, okay? If markets jump to risk off, if there's a new war that pings up or whatever, risk off, I will then look to buy CHF against a weaker economy, sometimes against USD, if that's where the money flow is going to, okay? If it's going from a risk on currency to a safe haven currency, then I'll look to buy a safe haven currency against the weaker one, i.e. CHF, Japanese yen, NZD, and gold. You'll see them getting these movements, okay, when markets quickly jump to risk off. Risk off never usually lasts that long. If there's an initial war, markets will jump to risk off, and then once the war kind of continues, markets will say, okay, this is the new norm. We'll now go back to risk on, and you can start then buying USD and so on, okay? But when it comes to CHF, it's just always placed in neutral for me, okay? And the reason for that is because I trade it based upon market sentiment and not based upon data, all right? Now moving on, Euro. Okay, so we'll go back over here. We can fly through this. So, bearish, bullish, bullish, bearish, bullish, bullish. When it comes to the euro, the ones that we really care about are France and Germany. Yes, we do have a look at Spain and Italy, but we don't really care because they're just not that big enough to make the euro sway. But we do have a look at them, okay, especially if it's longer, like 6 month or yearly. All right. Bullish, bullish, bearish, 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 bearish. Sorry, bullish. Bullish, bullish, bearish, bearish, bullish, bearish, bullish, still bearish. And let's look at the bonds, bullish and bullish. Now with the bond markets, when the bonds go up, bonds will move before currency, okay? So we bear that in mind for next week, and we'll look into that. Bonds move before currency. In this video, I'm not going to explain why we care about the bond market as forex traders, okay? I've done videos on that. It's on my course. If you want the course, you can have it completely for free, okay? It's on there. What else have we got here? Retail sales, bearish, 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 and bearish, okay? Overall, that's what we call mixed data, okay? It's kind of on and off for both. However, overall, it is fairly stronger for the euro. We are in a little bit of a kind of grey area right now with the whole Sea of Hormuz, because if that gets shut down, Europe relies so heavily on imports and this, that, the other, that they get a huge effect from it. So we're kind of in this little phase of limbo right now, where 1 minute it's open, the next minute it's not, and yeah, we're going through this kind of the hot locker, if you like. This week coming up, we've got a fair bit of news we'd like to see. So CPI month on month, okay. German bonds, WPI, French CPI, flash employment change, flash GDP and trade balance. Okay, so there's a fair bit of news we want to see this week. Nothing major, but it is stuff that we are interested in. Okay, so for me right now, I would be putting Euro in neutral. Now it's one of those neutrals where it could be edging on weak bullish, okay? It's between neutral and weak bullish, so I would put it in neutral for now on your notepad. Next, moving on to GBP. Let's look at last week. Bullish, 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 bearish, okay? This week we've got GDP, prelim GDP, construction output, goods trades balance, index of services, manufacturing production. We've got a little bit of news we want to see this week that we care about. Not too much, so it's not a massively news-filled week for GBP. And for that, I'd be putting this again, same in neutral, and it could be potentially weak bullish, okay? It's not massively bullish, weak bullish, but I would be placing it in neutral on your notepads. Japanese yen, it's already, for me, I already know it's weak. I don't even have to look at it, but we will. Last week. So, bullish, bearish, bullish, but it's a kind of false bullish because this was bank intervention, okay? So, don't be fooled by that. That's why it's important to keep up with the news. Average cash earnings has increased. Bullish, bearish, bearish, and bearish, okay? Japanese economy isn't that strong at the moment, guys. You'll see if you look at last week, Japanese pairs, they gave a massive move for this strength out of nowhere for Japan. That was the Bank of Japan intervention, okay? So don't think, well, if it's weak, why is it strong? It's not strong, they just intervened, and I think the US helped them out as well there. This week, bearish already, bearish, and bearish, okay? So I'd be putting Japanese yen in weak, flying through, and we are now on the last one. Okay, let's stand over here. So there's tons for USD. Bullish, 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 bearish, bearish. However, it came in as expected, so that's still okay. Bearish, job openings, bearish, 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 bullish, bullish, bearish, bearish, bullish, sorry, bearish, bearish, bearish. Yeah, it's been a massively bearish week for, that's unemployment rate, bullish. A massively bearish week for the USD, okay? However, long term, I am still very bullish USD at the moment, okay? There's just a lot of kind of, let's just have a look. So this week we have got CPI, okay? It's a good CPI week on Wednesday. We've got core CPI on Thursday and PPI, unemployment claims. So yeah, we've got a fair few things that we want to see from USD, okay? I would be putting USD, you could put it anywhere between kind of neutral to weak bearish, okay? Bearish to neutral. And that's for this week, it's not long term, okay? Remember what I just showed you on the gold, okay? So it's bearish for now, but overall, I am still bullish long term on it, okay? Now let's have a quick look at Prime Market Terminal. Let's see. Now Prime Market Terminal already kind of does this for you if you don't want to learn fundamentals, okay? They've got this here. Let me just open it up. Okay, so if you want a cheap method, you can come here and it will tell you USD, weak bearish, Euro, neutral, GBP, neutral, CAD, weak bullish, but again, that's based on oil, okay? It's not based on the economy. AUD, weak bullish, NZD, weak bullish, Japanese yen, weak bearish, CHF, weak bearish, okay? Now, there are plenty of times where I am not in alignment with this. You know, one time I might be telling you something is bullish and they'll be saying it's bearish. It's because these guys are talking about what's happening today and this week. And in general, I'm talking about how it's lining up for the next 3 to 6 months. Okay, that's pretty much it. In terms of technical analysis, there's really nothing that I'm looking at right now apart from Euro USD. Okay, so let's just have a look here. There's really nothing lining up for me just now. You know, I can go through all these pairs. For my method, there's nothing. So I'm waiting for this to come back, retest here before I enter a buy. Okay. I'll just show you the one that I'm looking at. We won't go through all the pairs, it just wastes time. However, I am looking at sells here. Euro USD. Let's see if this will work. Oh, there we go. I'm looking to sell that. Okay, as soon as Euro USD hits here, I'm looking to enter a sell. My stop loss will be up here, and my take profit is away down here at 112,000. Okay, so my entry for Euro USD is going to be 1.16000. My stop loss is going to be 1.17500. Sorry, 1.17500. And my take profit region is 1.12000. Okay, so that is going to be my sell trade that I'm waiting for. I'm just waiting, and hopefully we get a good liquidity grab here, which will set us into the market because I have a sell limit set, and we will be good to go. Okay, so each week I'm going to be running through a fundamental analysis and review of my opinions on the market, and I hope it helps you. If any of you would like my full A to Z trading course where I cover everything from fundamentals, banking data, technical analysis, and then at the end, how to put that all together where I actually take trades during the course, I'll gladly give you that for free and you can learn in your own time. Okay, I'm Ryan Mack, thank you for watching, see you next time.